Welcome to The Curve Weekly, where we read the finance news so you don't have to. I'm Vic Harris. I'm a finance professional, and I've had a career making money for other people.
And I'm Sophie Hallwright. I'm an executive producer of radio, television. I was just really sick and tired of not understanding the economy, so Vic and I started this podcast. Quick thank you before we get into it to our amazing team behind the scenes, Emily Rigby, our producer, and Lucy Munro, our social media manager.
In today's episode, we're giving a quick update on the meme stock that's made a bid for eBay. We talk about the oil crisis and that scary I word, inflation.
There's two main stories we're looking at today. Firstly, there is a company that from the outside looks like they're killing it, but are they actually? This business is about to go public for the first time. We're not so sure how positive this is going to be.
And secondly, the Australian budget. There is some major tax changes happening, and we compare this to now how it looks versus New Zealand and the UK.
And don't panic or be bored. Tax is important.
Tax is very important.
This is actually really important, so definitely stick around to listen to that.
But first, a word from today's sponsor.
This episode of The Curve Weekly is made possible thanks to Pathfinder KiwiSaver Plan, helping you invest alongside your values.
We're really excited to bring you the ethical hotline where you can ask all your tricky ethical questions.
Each month, Pathfinder will answer the most interesting, popular or polarising question. To submit yours, follow the link in the podcast show notes. Pathfinder Asset Management Limited is the issuer of the Pathfinder KiwiSaver Plan. A product disclosure statement is available at pathfinder.kiwi. Guys, I have to admit, you know how we talk a lot on our podcast and on social media about how to split your pay and how to do this and do that? I have been so naughty the last 2 weeks, and I'm constantly pulling money out of my gifts fund or my this fund because I've totally run out of money.
That's okay.
It's like I feel so far gone, and today's payday, I feel like I'm
You're
burying
so
my
far
head
off
in
the
the sand.
bandwagon. Like you're like off the bandwagon down the road, round the corner.
Yeah, like the bandwagon or the wagon is like now been left in another country.
Okay.
And I have decided that...
That's all right. There's another one coming. There's another one coming. You can get back on.
But that's the thing. I'm struggling to get the motivation to it because I feel really annoyed about the fact that I built up this money in the different pots and now I'm starting again.
But that's the thing. You built up the money.
I'm like disappointed with myself. It's almost like self-hatred mode.
Oh.
Yeah, not self-hatred. It's almost like I'm trying to punish myself. Like I've bought lots of stuff for work things and not reimbursed myself.
Talk
and
to
I'm
yourself
just
like you would if it was a friend. What would you say to a friend that had done the same?
I would say put time aside this weekend on Sunday. Make time for yourself. We all mess up and, end up doing things that are the opposite of what you say you should do. Pause. Look at how much is coming in, re-look at your numbers. You're obviously not quite nailing it. Maybe you're investing too much. Maybe you're putting too much in certain buckets, but just take the time, take an hour. I don't feel nice to myself. I can even just tell the tone in my voice.
Yeah.
I'm like,
you don't believe, even when you just said that, you're like,
no,
take
but
some
I will
time
do
this
it.
weekend. It's like...
No, I will because I'm publicly announcing that I'm doing it. So it'd be really embarrassing if I come back next week having not.
Yeah, next week we'll make a note. Emily, our producer, will make a note in the prep sheet to ask Sophie how...
I'm actually really glad you have done that because otherwise you never know.
Accountability is great.
I actually agree. And I think if you're in a similar position, sometimes almost, like for example at the moment, I cannot get myself back in meditation. Like I need to meditate every day. I'm a way better person when I do it and I've been struggling too. So I've made a deal with my boyfriend where like he's got a really bad back and he needs to stretch.
Oh my God, we should chat.
So we're basically he's doing his stretches while I meditate and then we're sort of like whoever falls off the bandwagon first, we're going to have some kind of like accountability thing.
Oh, nice.
Anyway, sorry, enough random chat about my life.
No, but can I just, this is kind of it is kind of a money-saving hack,
okay.
I guess. This app that I found. It is an app that you take photos of every single item in your wardrobe and it generates outfits for you in the morning.
No way.
I know. Like Clueless, but like in today's age.
Have you been doing
No,
it?
but that's what I'm doing this weekend.
What's the point of it?
It's quite a like... To get set up, you have to take photos of all your clothes and stuff. But it's so that you don't have to buy new things. You can be like, oh yeah, that's right, that top, and it goes well with those shorts. And I've never thought to put those combinations together. Or you're like, hey, I want to wear my brown cardi today. Can you suggest some bottoms for it?
That's actually quite good. But oh my God, we're going to not be using our brain at all in 2 years' time.
It's all about removing decision making. It can also save you money because there's maybe items in your closet that you forgot, but also it creates like new exciting combinations to wear.
You only use like 10% of your wardrobe or something crazy.
Yeah.
I interviewed someone, it's coming out in a couple of weeks. Her name's Fran, and one of the tips she gave was to take photos of outfits that you like, save them in a folder, and they can be your work outfits or your going out outfits so that when you're feeling like I have no outfits. It's the same kind of premise. And I've started doing it and it's been great. That's coming out not this week, but next week. But what is the app called?
The app is called Wearing with an H. Wearing.
What?
Wearing with an H.
W-H.
Yeah. WHERING.
Jesus, it's really testy everyone's spelling. We'll link it in the
Anyway,
podcast show notes for anyone that wants to download it. Right. Now,
speaking of clothing, eBay.
We spoke about this last week. It's a pretty funny story. So for anyone that's missed it, GameStop was a meme stock that went viral a few years ago. They last week did a takeover bid for eBay, which is 4 times its size. So a lot of people kind of laughed. It was this big, hilarious. Everyone's just saying this is obviously not going to go through. So we have an update.
Yes. So the eBay board has rejected the offer, which was
not really a shock.
No. They said it's neither credible or attractive. So
God,
effectively,
what a funny quote.
The board is kind of the spokesperson for the shareholders, and they're just absolutely not. And then the GameStop CEO has already come back. They've fired off a letter to the eBay chairperson and said, we're going to go straight to shareholders and we're going to let them evaluate it themselves.
But surely shareholders can see everything going on in the news, right?
Yeah.
So they can see what's going on.
But I guess there's more weight if the board is like, this is a really great offer, you should accept it.
Right.
So he also went on Piers Morgan and said he's going to do whatever it takes, essentially.
I love the asset. It's run by a bunch of losers, and it's something that can be a lot more successful if it was run by an owner that's an entrepreneur that has not just a much larger vision, but knows how to run a business and make a lot of money and cares because I have my own money on the line.
I reckon he's fueled by a no. Do you know what I mean? He's one of those people that you tell me no, I'm going to thrive on that. If you think about his previous businesses, he got told no by venture capital to get funding for his first business so many times.
What was his first business?
Chewy.
The pet, that's right.
Because they were like, well, Amazon delivers pet food, so why do you think you can do it better? Anyway, he built their business to nearly $3.4 billion when it sold. So it was kind of like a big FU to venture capital. And so he's just like, I'm going to do it. And GameStop has quietly bought a stake, 5% stake.
This is actually what I was going to say, because I think that firstly, most entrepreneurs or founders, I imagine, are fueled by no. I feel the same.
Yeah.
So many times, particularly because the finance industry is absolutely not built for women. I mean, think about how many times people said you're not going to raise money from investors or...
it puts fire in your belly. You're like, 100%. I'm going to prove you wrong.
Yeah. So I'm not surprised by this. But yeah, this is really interesting. Just the idea that they actually already own a 5% stake. That's a lot.
It's more that once you've got that 5% stake, you can then call like a special shareholder meeting and you can overturn the board, and then you can put in people on the board that will approve the offer.
So basically he's trying it from all angles. Yeah. He's doing the takeover, he's bought shares, he's going to try and make it happen. I kind of here for it, and I really hope that he can buy it.
Yeah.
Because eBay's so blah. Like, buy it, do something cooler with it. I'm here for it.
He also made a point when he went to shareholders of eBay calling out the eBay management pay packets that they pay.
Are they getting paid a lot?
And that's one way to get shareholders on side. Like, they hate it when, So,
well, and the reason to explain for anyone that doesn't understand that, obviously shareholders are kind of funding the business, right? When people put money into a business, whether it's 10 or 100 million, the money is going to fuel the business to grow. And so a lot of that, and for most businesses, a huge amount of spend goes on people. And as soon as people hear someone's being overpaid, I mean, think about it with Parliament. If you have some president that's being paid a ridiculous amount and the country's suffering, like it's the biggest headline you'll see.
Yeah, it's got to be in line with the risk and I guess the effort they have to put in to run that business. But it is one way to kind of get shareholders up in arms.
Now, okay, so oil, we want to show a quick update on this, right? We talked last week about there being 38 days left of oil in Australasia. What is going on now?
We're probably 35 now, considering we do this podcast weekly. What we're starting to see now is inflation coming through in the numbers, because remember the war started in April, so we're starting to see April's numbers come through now that we're in May. Whereas before we didn't. It was obviously a lag. And in the US, inflation's now nearly 4%. And the main driver of that was petrol prices going up nearly 30%. Yeah, it's starting to come through. There's headlines in the UK saying, brace for a new cost of living crisis, which is just, and I know newspapers have headlines like that to sell newspapers, but it's not good news.
I think as
Did
well.
you listen to any
No,
of
I
that?
was sorry. I'm so sorry. I was taking a really cute video of me. So I think with this, it's kind of similar. How would I explain it? Sorry, your dog is too cute right now. She's leaning her like head on my chair and then putting both paws up for me to give her a paw massage. Now, the oil situation, you've talked for months and months about the fact that this is going to increase inflation. I think it's one of those things where until you see it in the numbers or until you start to see things happening, it's this sort of fictional idea. It's like global warming. People can't really compute the idea of a future thing happening until they start to see proof of it. And I feel like that's exactly what is happening here.
Do you feel, I was having this conversation with friends on the weekend, that I feel like there is just this dark cloud, you know, particularly in the UK at the moment, of everyone's just talking about the cost of shit.
I mean, I know a lot of people that are choosing to move out of city centres because they can't afford to be in London or in New York or in Auckland or Sydney. You know, the cost of living in terms of literally housing is pricing so many people out that weren't priced out before. But yeah, I don't know.
But it's like, where do you move, right? Because Australia's feeling it. New Zealand's feeling it.
So I don't
the
really
US
want
is
to live
feeling
in the
it.
country. You know, I was looking this morning at houses.
You don't live in the country?
No. But I'm like, where else? You know, like you have to move quite far out to get any reprieve from pricing.
Anyway, prediction markets.
So, okay, for anyone that doesn't know about prediction markets, is Polymarket a market or are they called
That's a platform.
Polymarkets? Okay, right.
Polymarket and Kalishi are two of the main platforms. Kalishi. Isn't she like, my milkshake brings other boys?
Yeah. She's certainly not what we're talking about here. So they basically bet on outcomes. So anything from elections, sports, weather, if a celebrity's going to win an Oscar, you know, it's there's been so much chat in the news about this.
Yes,
And particularly around how do you regulate it. But can you explain the whole contracts thing? Because I don't really understand this piece.
Yeah, so this is where there's the grey area. And we've kind of spoken about this before, but I wanted to dig deeper into like why it has got approval and why it has become legal is because when you invest in like a commodity, like say you invest in gold or coffee or milk, you don't actually buy, you know, a kg of coffee and they deliver it to you and you've bought that. You buy a contract of the price of coffee in, say, 12 months or 2 years. And this is what airlines do with oil, for example. Yes, they buy some of it, but they also buy to like lock in a price in the future.
It's like energy, isn't it?
Yeah, so it's like you can do anything. Like the biggest thing is in commodities. So how these two platforms, you know, have dominated in prediction markets in general is that they are just saying it's exactly the same. You're just buying a contract on an outcome instead of a price or whatever it is. It's the chance of something happening. And so if it's like the contracts are priced like probabilities, so you know if there's a 41% chance of something happening, then it's a 41-cent contract. That is how like they're kind of framed as these like financial instruments rather than gambling. So say you bought like, what's a yes or no prediction?
Is the new Road Peptides lip gloss going to run out within a week of being on sale?
Oh, very specific.
Thank you. I really want to buy one.
And say you thought, yes, it will. Mm-hmm. And you bought 100 yes shares.
Yeah.
Yeah. So for the yes contract, not the no contract, the yes contract, you buy 100 yes shares.
Yes.
At 40 cents each. So there's a 40% probability that's going to happen, that they're going to run out. Then you'd pay $40.
Oh,
100 times 40 cents, $40.
Is anyone else getting that? No.
You buy 100 yes shares at 40 cents each. So you've paid $40.
Okay.
Yeah. And then the event occurs. It is, yes, they do run out. You're like, woohoo. Then you receive $100.
On top of that 40. So it's like,
You receive 100 in total.
oh, so you've made 60.
Then you've made $60 profit. If it doesn't happen, you've lost 40.
Okay.
Does that make sense?
Yeah, but you don't really make a lot. If I've put 40 down and then all I get back is, oh no, I get 100 back. Got you. Sorry, I make sense.
Yeah. But also multiply that by massive amounts. People are putting like crazy amounts down.
Just for context in terms of how fast these prediction markets have grown, last year there was 1.8 billion going into the platform.
Yeah.
This year, as of April 2026, that's up to 24.2 billion. So that's a huge increase in a really short space of time.
And when there is that much of an increase, that's when the regulators and people go, when any product is going absolutely crazy, like it was crypto before, now it's prediction markets. They're definitely under the microscope. Brazil has banned all prediction markets. They've obviously labelled it as gambling. But over 70% of Polymarket users, so that's the largest platform, and then Kalshi is the second largest, lose money overall. So to think that you're in the 30% that can make money and actually win. It's like going to the casino. The house always wins. There was one example is that someone on the prediction markets turned a $119 bet to a $21,000 bet by heating a weather sensor near a Paris airport with a hairdryer to make the outcome.
Oh, you're kidding.
So people like interfering with this.
Quite clever, really.
Yeah,
I
know.
Get creative on how you're making money.
There was AI-generated rumours about Netanyahu's death, which is the Israeli president. There was, but it was all AI generated. And so there was an outcome on that. Like there's shit's just getting crazy now. Oh yeah. And there was a US Special Forces soldier who was indicted for using classified knowledge of a military raid in Venezuela to win over $400,000 on a Polymarket. And it's the first criminal prediction market case in the US.
I think there's going to be so many more of these.
Yeah.
I mean, the hairdryer example's
genius.
It's genius, but it's also like if someone's doing that, imagine what.
Oh, these are the ones that have come to light as well. Like imagine the others.
Imagine if Rode, the whole peptides thing was a thing. I'd just bet way more than what I would spend on buying the entire catalogue so that it does sell out and I win all this money. Okay, I was about to say we have an exciting IPO happening, but I don't know if this is exciting. The reason I found this exciting is because I know the company. I kind of wanted to keep this a secret so people can try and guess what we're talking about. I use the products. I've fallen off a product. I've injured myself from a product. They're bright green. They are a way of getting from A to B.
They're good for the environment.
They're very good for the environment. What else have we got here?
They end up in canals.
Oh, yes. They've ruined many of my clothes because I've had clothes stuck in part of the product.
You get icky hands
after the oil.
Yeah.
So Lime, which is the bikes in London
guessed.
that everyone uses. I mean, I don't know if this is super mainstream in other parts of the world yet, but I would say it's particularly common in London. I went to a Hackney Wick, which is a small little part of East London that's quite hard to get to, and I didn't realise there was this enormous concert on with all these young people that looked so cool. And you go past like sort of 25-year-olds that are like cool. They were wearing such awesome outfits. I just looked around and it's just seas of Lime bikes. Basically, they're going through an IPO, so they're going to be a publicly listed company, which means that any of us, if we want to, could buy shares in the business. But it's not really a success story in terms of why they're going public, right?
No, and I think that's kind of why I wanted to highlight it. It's like we do hear a lot of these like really exciting companies coming to IPO and be public for the first time, and they've got these incredible growth strategies. But there is also companies that have to go public. They need money, they need capital, and this is exactly what Lime's doing.
It's interesting because if you zoom out and you hear that this company has bikes in over 230 cities, that's a huge amount of the world. There's 29 countries that it's in, and it's had over 1 billion rides. You would hear those stats and think they must be killing it. They must be so successful, and they're going public. What a success story. But when you look beneath the hood, it's actually not that great.
They've also got $1 billion of debt that they owe.
It's a lot.
And about 850 million of that is due in the next 12 months. And they just don't have the money to pay that. So it's not a success story, because if they raise that money, they pay off the debt, then they've got a lot more freedom to grow. And I'm sure that's kind of the narrative they're going to spin to investors. Then they'll be able to continue to operate and be, even more successful. But it's not really that whole, we're so successful, we're going public, buy our growth plan. It's a bit more, we either go public or we go under completely.
It's not that exciting.
No.
Although I guess if you look at Uber, who does own Lime,
yes,
they were in debt and not profit making for years and years and years. So this can be a way to become quite successful, right? Like a lot of businesses operate in debt, and I think that's something that heaps of us don't really understand.
Yes, and the key thing is they've got free cash flow. Free cash flow is a really key point because it means that they are generating cash. Then the company it's just the debt side of it that is kind of holding them back. But revenue minus expenses, that kind of thing, the operating side of the business is still doing really well. They've just got this massive debt they have to pay, and it's kind of wearing them down. So once they can kind of raise money, pay that off, like operationally, the business is doing really well. Revenue is up about 30% last year. So they're not burning through cash. Like they've shown investors they can exist. It's just this debt they took on over the last few years is now coming to kind of bite them in the ass.
Do you think the idea that Uber owns Lime and Uber is such a success story, do you think that will stand them in quite good stead to go public, in the sense that people look at Uber and think, okay, well, they've managed to get out of their debt hole, so we back Lime to do the same?
So Uber wasn't debt, it was cash flow. So it's like when obviously their expenses and their things they had to pay for were more than the money they were bringing in. And that's normal for a lot of tech companies. You get to a point though where you become, you're profitable, and then you're kind of self-sustaining. So Uber owns 10% of Lime.
I actually thought it was the whole amount.
Yes. So they own 10%, and they've got a really strong partnership there because Uber brings in 14% of Lime's revenue.
That's a lot.
So if Uber walked away, that's when you'd be like, absolutely not. Like there's meaningful dependency there on Uber. And if they pulled out, they didn't integrate anymore, like that would be hugely, hugely disastrous. So it will be interesting to see what Uber does when Lime IPOs, whether they keep their 10% stake or they sell as well. If they sold, that would be a big red flag to me, even if they sold some of it, because you want them to be incentivized to keep that partnership alive. If they don't have skin in the game in Lime, they could just cut it at any time. But if they cut it, their 10% stake is going to be impacted too. Do you know what I mean? So there's kind of got like double whammy. Yeah. Does that make sense?
I was on the back of my boyfriend's moped the other day, and we were going past all these limes, and I said, God, it's a good business, isn't it? Love Lime. I think they're just so clear. What a genius idea, because I use them all the time. And he was like, yeah, but they don't have a huge markup. Like, it's like quite hard to make money in terms of the upkeep of those bikes.
Yeah.
They're constantly breaking down. They're often disgusting in terms of...
I reckon I've had every single flat tire, no seat, no pedal, no handle, chain coming off, like
rubbish
honestly.
everywhere. Like it's pretty.
Yeah, we still use them though. So there's some kind of psychological
Anyway, what I was thinking was, okay, wow, amazing business model. But actually, if you're constantly having to replace these bikes, which are not cheap, surely, they're trying to keep their prices in line with how much it costs to get on a bus. It's like £1.70 or something. They're constantly changing how they're doing their pricing, because last year it was, you get 400 minutes for £35 or whatever. Now you pay for every ride. Like, they're constantly trying to figure out the best way to do it. But
if anyone can do it though, right, it's Uber. Like, if you got to have scale, I reckon, for these bikes.
But I think the thing that I don't know how they're going to get around this, but I personally have had many Lime incidents, and I just feel like you see all these people on these electric bikes without helmets in one of the busiest cities of the world. It's quite dangerous, and I feel like the amount of claims that they're going to get for health insurance for people dying on a Lime is going to probably take them out of business. Like, I know that's dramatic, but I know I've heard so many stories about that.
Yeah, well, that's why they recently changed them in London. They changed the bike because they were getting too much of what they call Lime leg, which you've had.
Oh my God, I've had a Lime
it's a
leg.
Thing. Yeah. And there's too many injuries of
Do you want to see
I've
got this huge scar from my
heavy
Lime
bikes
leg.
falling on people's legs and breaking them and injuring them, and it's a known thing now. Have you had Lime leg? It's
I've not heard the phrase, but I've certainly had Lime leg.
Yeah.
Anyway, my point is, I do think that this is something that they're going to have to look into if they want to scale and be successful. They have to think about the the impacts this is going to have on a lot of people.
It's funny, we, you know how there's people that will go around and change the batteries of the bikes to make sure that they're
I've never
always...
seen that happen.
Oh, I see them or they pick up the whole bike.
I've
or
seen them pick up the whole thing and take them away.
And anyway, we were at a park the other day and this guy was like changing out the batteries and Flower Man's like, oh, mate, do you work for Uber?
Of course he did.
And he had this boot full of batteries. And this guy's like, yeah. He's like, I just go and I pick up all these batteries and I go around and change them. And Flower Man's like, and how much do they pay you?
He's like, I'm in the market for a new job.
It was about £2 a battery. So the more he can do, this guy, the more he can do, the more he gets paid.
Quite good.
And Flower Man was like, I think I should do that. I was like, hey, you don't have a car, so you got to take out the car hire fee. Like, I was like, absolutely not. But I love how Uber and Lime, like they use
people cleverly.
That maybe have spare time or want to earn who want to earn a bit of extra income. It's quite good. And the whole sustainability element here, I think, cannot be ignored. And I think that's why, Uber has, yes, they're a mobility company, but the fact that they are supporting people getting off the roads and biking instead of using cars and all of that. Yeah.
I also think, there's a lot of people that work for Uber or Lime. You don't hear reports about them being treated badly or them that, whereas if you look at Amazon who have, so many employees and there's so many scary stories about how people are treated. I just think that if they're employing that many people, whether it's changing batteries, driving the cars, whatever it is, you would think a business that big that's employing lots of different contractors that there'd be some stories about things coming out, but there's just not.
Yeah.
And I think that's hard when you've got so many employees all over the world.
I think also...
I guess they're not employees though, are they? They're contractors.
Yeah. I also think there has to be some government, subsidies or incentives here. Like this is a company that's genuinely trying to lower emissions in your country or, get more people off the road, etc., reduce congestion. And I just think there has to be some kind of subsidies. If Lime can't make it a success and they're backed by one of the biggest mobility companies in the world.
We've got no hope in hell. Okay, coming up after the break, we're going to be speaking about the new changes coming in that are going to impact your investments. This is huge. This is off the back of what's happening in Australia, but we're going to talk about how this and what you can learn from it will impact people all over the world when it comes to how you're investing and how much money you're actually making.
But first, we have a quick word from today's sponsor.
A recent study Mindful Money did found that 50% of New Zealand investors are worried about greenwashing. And honestly, I get it. It's really hard to know what to trust these days.
And that's why we've partnered with Pathfinder KiwiSaver Plan because they make ethical investing understandable and accessible.
For Pathfinder, being ethical means avoiding some profitable companies. So for example, Amazon, IBM, Tesla, and instead investing in a diverse mix that aligns with their ethical investment policy and aims to grow wealth over time for their members.
So you can invest in the Pathfinder KiwiSaver Plan and they'll do all the difficult thinking for you about whether a company is ethical or not based on their policy.
Pathfinder Asset Management Limited is the issuer of the Pathfinder KiwiSaver Plan. A product disclosure statement is available at pathfinder.kiwi. There has been quite a bit going on in Australia. We've had so many people messaging us saying, please decode what's going on. Oh. I love that. I love that people are starting to see things sort of probably on social media and then they send it to us and they say, please talk about this.
There's been a lot of non-political or non-financial influencers and celebrities in Australia getting up in arms about this. Yeah, so we had the Australian budget this week. I know that might sound a bit like meh, meh, but a budget is actually really important that we pay attention to these. No matter what country you're living in, there's always something you can learn. But if it is in your country, it's really important. It is an announcement that usually happens once a year. The best way to think about it is like with your personal finances. You set a budget. What will you spend on? What will you not spend on? What will you cut back on? What will you, put away and save for a rainy day? All of that. That's exactly what a country budget is. It's exactly the same. And there's one part in the Australian budget that has been focused on this year, and that is capital gains tax, which is the tax on usually any gain that you make on an investment, you pay capital gains tax on. Very slightly different countries, but back in 1999, Australia introduced a rule that if you hold an asset, so property, shares, whatever, for more than a year, you only pay tax, so you only pay capital gains tax on 50% of your profit, so half of your profit. The other half, the government just ignores. So if you invested in shares and you made $5,000 dollars in gain, so as your kind of profit, you'd only be taxed on $2,500.
That's so great.
Yeah,
What a genius thing.
The other $2,500 you just get to keep. So you're only taxed on 50% of the gain.
Is that across the board with any investment, property, shares, etc.? Gosh, that's so good.
So you can think if property investors had held their houses for like decades, you're making a couple of mil. That's huge.
And they only pay income or tax or whatever on half of their income.
So say you made $3 million on a house, and that you'd held for decades and decades, and through certain family members, then you only have to pay tax on 1.5 billion.
I think a really interesting way to think about this is in the same way, and I don't know why it took me so long for this to land, but in the same way you pay tax on the money you earn from your job. So, there's different tax brackets depending on what amount you're looking at, etc. But the idea is any money that you make, the government takes a percentage of to spread and use within their budget to pay for things like roads or healthcare or whatever.
Yeah.
This is essentially like saying 50% of your income is not taxed because so many people are making a lot of money. I know, that's what I mean though. It's almost like money makes money, right? Because the people who would have benefited from this is the ones who have a lot of money because they're like, brilliant, I can invest and invest and invest, and only half of the amount of money I'm making, my income from my investments, I'm getting taxed on. Amazing.
So the budget has announced that from July 2027, so in the next year, that 50% discount, so the 50% you don't have to pay capital gains tax on, will be replaced by what they're calling cost-based indexation. It's inflation adjusted, and I'm going to explain in a second. It just means that we'll adjust the original purchase price for inflation, so you're only taxed on the real gain, so the profit over and above inflation amount. So
I need an example.
So let's say we have, what should we call her?
Come up with a fun name. What about we call her Cecil?
Cecilia,
gorgeous. Yeah.
Cecilia, she's 28. She lives in Melbourne, and she has been investing in shares. 3 years ago, now I can't stop thinking Cecil. 3 years ago, Cecilia put $10,000 into an index fund.
Yeah.
And today it's worth $20,000. So she's made $10,000 in profit. Amazing. Now she decides to sell. So she's got $20,000 worth of shares and $10,000 of that is profit. So under the old rules, she's made $10,000 profit.
She would have only paid income tax on 5.
Capital gains
tax on 5,000.
Yes, yeah, exactly. Which is half of the profit.
Yes.
So under the new rules, that's gone. So we take her full 10,000 gain and we adjust it for inflation. So let's say inflation over the last 3 years added about $1,500. So her real gain, so if you take away 1,500 from that, her real gain, so her kind of ex-inflation gain is 8,500.
Okay.
So she's taxed on that.
Oh, shit. So she's actually worse off, definitely.
Yeah. It's great if inflation's really high, So say inflation's been super high over that 3-year period.
Which, to be honest, it might be in the next 5 years.
But like the likelihood of getting up to 50%, like that's, I mean, if you held it for over a long period of time, it might get there. Yeah. So it's only going to really be in a really high inflation environment would it kind of be anywhere near that 50% discount. You're taxed on the whole 100% now, but just a little bit is adjusted for inflation, if that makes sense.
So if you're an investor in Australia, this is not ideal.
Yeah.
It's definitely, you're paying more to the government for the returns that you're making.
Yeah. You're pretty pissed off. And this is not just property. This is shares, this is ETFs, this is every asset, really.
Who do you think that's going to impact the most?
Look, they brought it in, and the whole preface that the Australian government put it in the budget was because they wanted to go after wealthy property investors that had made a lot of money over many, many years and sitting on decades of property gains, but they've applied it to all assets. So I'm like, hang on, it doesn't actually solve that problem. And younger Australians are the ones that are going to be building wealth, that are more likely to build wealth in shares, ETFs, index funds, because they can't afford property. So they're getting penalised. Yeah, I can't figure out what they were trying to achieve here.
Can we look at the rest of the world? What is going on in the UK in relation to capital gains tax?
Yeah.
And just generally, like, what is standard? Is it standard to be taxed on everything or not?
Well, the UK's actually got a tougher stance on capital gains tax than Australia. So you pay capital gains tax on the full gain every time. So,
And I guess that's why ISAs are great,
Yeah.
because you can put 20,000 into your stocks and shares ISA or your cash ISA, and those 40
protected.
It's less now though, isn't it? It's only
it's
12,000
less,
cash.
Yes, for the cash ISA.
But essentially that amount for every single person is tax-free, which I think is quite good, because it means that people who are trying to build up wealth
Yeah.
have the same almost leg up as people that have a lot of money.
Yeah. Yeah, you're giving everyone the same kind of starting platform, I guess, and then anything over and above that is taxed.
I think that's great. I think that makes sense.
And then in the UK, your main home is exempt from capital gains tax, but if you start buying second, third homes, then
interesting.
Yeah. So, and that's the same in Australia. Your main home is exempt. In New Zealand, no capital gains tax.
With anything?
There's a bit of a nuance. If you sell your investment property, in most cases, if you sold it for $1 million, you get to keep, the full profit.
That's crazy.
There is what we call a bright lines test, which is a certain number of years that you have to hold the property, otherwise you get taxed. So
and
that's
just
to stop the flipping, like
that
the house
makes a lot of
flipping.
sense.
But shares, business assets, commercial property, like pretty much completely untouched. So that is why, we have a lot of wealthy people buying property, in particular in New Zealand, not only because it's just such a great country, but because, there is very little tax. Like, we've got a very attractive tax environment in New Zealand.
But if we look at that
From a tax point of view, yeah.
Let's say in 5 years' time they did bring in capital gains on everything. What does it mean for everyone that currently owns it? Do a lot of people just plan on, then they sell it before it comes into play, and then, because it's almost, I feel in the same way when they raise retirement ages. If you've been planning your whole life and you to retire at 65 and they raise it to 70, there's got to be a grace period, right?
There usually always is with tax changes. There'll be like this one's not coming in for another year. So I don't even know what that does in terms of, is there going to be a flood of people selling shares, selling property, before it comes into play. But usually there is, when they raise the retirement age, for example, they say, anyone born before X, it's not like they're going to hit the 64-year-olds and be like, oh, you've got another 2 years.
Yeah.
They're hitting the kind of the 40-year-olds or the 50-year-olds that have enough time to plan. But it's so hard for politicians to change tax or bring a new tax, because you're always impacting someone. If you're trying to target older generations, like this is what this was supposed to target, but there was a rule, and I might get this wrong, but something to do with any property bought before like 1985 or something is exempt, or there's some kind of asset. So, but because, and then I read somewhere that yes, they're trying to fix like intergenerational unfairness, like that was what they highlighted, but they're protecting older Australians because they've got the biggest voting power. Like they're the ones that show up and vote the most. So as politicians, you got to be careful that you don't, yes, you can piss off younger Australians. Very few people turn out to vote in terms of the younger cohort, percentage-wise, versus older people. So, yeah, it's...
There's so much of this going on in the UK at the moment. Everyone's really not happy with who's currently in charge. And
we might have a new UK Prime Minister by the time this comes out.
Yeah, I mean, honestly, it's really interesting, because I would normally not be paying attention to what's going on, but it's just the idea of you kind of can't win. If someone else goes in and then they go take the country into even more debt, it's not ideal. I think that seeing stuff like this happen, I guess you don't even really know how it's going to impact people until you've given it a few years. But often someone new comes in a few years and then changes it, and it's just
totally. If you bring in
exhausting.
If you bring in a tax change that pisses off enough people, you get booted out, and the tax change doesn't even make it in because you've lost your job and some other party is in power. So, and then nobody's going to vote you in if your campaign is to increase taxes. So
one of the things I think is quite interesting about this is I don't know, this is quite controversial to say, but if you look at China, who are obviously making decisions about their entire economy in a communist way, but they're also investing in companies and the country with a 100-year view. So the decisions that they're making are not short term, while obviously there's a lot of complex things that are not ideal when it comes to that kind of setup. to be building businesses, the economy, making decisions on a long future, the idea of that is actually quite clever, because I think
It's hard though. How do you do that without a dictatorship?
I know.
It's so,
I know.
Yeah,
But
it's the same with companies, right? You have CEOs that come in for a couple of years that want to bring around short-term change, and then you've got founders that take those long-term views, and it's exactly the same.
It would be so amazing if you could find a middle ground between not actual communism or dictatorship, but more long-term thinking, because the stuff that's coming out of China in terms of their innovation around what the world needs to see for climate change is incredible, the stuff they're investing in, but, you know, there's obviously all the downside of what that comes with. We have a community question, which actually is a really good one.
Long-time listener and lurker. I have a question about hedging. I'm not sure if it has been covered or not before. I just can't understand it every time I look into it and keep seeing funds or ETF which are hedged versus unhedged. What do they mean? So hedging is when it's kind of like if you're hedging your bets, you know, like you are trying to balance out the impact of foreign exchange or like currency impacts. So with ETFs, most ETFs are probably investing in US companies, so they'll be in US dollars. So if they're hedged, then that means that they are trying to kind of offset the US dollar currency because we're investing from New Zealand or from Australia or from the UK.
Could you give an example of when someone might hedge?
Well, sorry, okay. ETFs, she says, you know, she keeps seeing funds or ETFs which are hedged or unhedged. So say I was going to invest in an ETF, the S&P 500 ETF, top 500 companies in US, all of those companies are in US dollars because they're listed on US Stock Exchange. And that ETF was hedged to GBP, so to British pound. That means that I don't get the impact of the hedging. I don't have to personally take the currency movements. They've kind of done it within the ETF.
Okay.
Do you know, does that make sense?
So if you're looking at the return on that ETF, you know that you're not losing out based on the currency exchange. So if it's a higher return, but then why, so let's say there was a normal S&P 500 ETF that wasn't hedged, and then there's one that was hedged.
Then you'd get the impact of if the US, because you're then converting that US dollars into pounds, or into New Zealand dollars or into Australian dollars. So if the currency moves in different ways and you've got a lot of your money invested in the ETF, you're gonna have quite an impact.
But why? What would be? Because surely it would net out to be the same, right? In terms of if you aren't hedged and then the currency is like taken into account in terms of the return you get versus one that is hedged. Surely doesn't it just net in terms of?
So the ETF is, yes, but the ETF provider is doing what we call the hedging. So they're buying kind of future contracts to lock in currency so it doesn't impact. So I didn't want to get in.
You could earn more.
You could if you took an unhedged or like you just were like, you know what? I'm just going to like weather the currency impacts and I'm going to buy an unhedged ETF. That means that whatever happens in terms of currency. You haven't got ETF providers or fund providers in there trying to offset the impacts.
So if you're buying an ETF that is hedged or unhedged, whatever,
they're trying to alleviate the impact of the currency.
So will you pay more for that? Because is the fee for that going to be higher because they're doing more of the work, or is it sort of not really? Because ETFs are normally really low fees. Like you don't normally pay a lot because it's computer generated.
Yeah, so there'd also be a computer generating that,
right?
Those forward contracts to make sure that they're locking in the price and like.
So I just don't understand why So would everyone be best to just hedge?
I've got a good example. Okay, it's like airlines.
Yeah.
So let's say they were like, they didn't kind of forward buy any oil and lock in a price, kind of like a mortgage. You're locking in a price for a set period of time.
Yeah.
So let's say I was an airline company and I was like, you know what? Yes, oil is my biggest expense, but you know what? Screw it. I'm just going to like weather the movements, whatever they are. And we're now in this environment where oil has gone through the roof. I'm sitting there going, shit, I should have hedged. I should have locked in a forward contract for the price of oil. Yes, when that rolls over, then it might jump up to the higher price, but at least I've got consistency and I know, and I'm not like dealing with these volatile movements of this oil price every day. It's kind of like that, but with currency. It's a way to try and get a better return because you think like, okay, if there's a big movement, maybe I can lock in some of that gain and not be hugely impacted in terms of the return. But I'm not a currency. I don't know where the currency is going to go. So for me personally, I'm like, I'm just going to, like, well, it is what it is kind of thing.
God, it's so annoying. There's so many things.
I think it's one of those things that probably like don't stress about. You'll get the gain if the currency falls.
It's almost like dollar cost averaging in a way.
You'll get a loss if it rises, and then you're not converting the US dollars to as lower currency. You know, like you kind of...
Unless you really understand currency and how it works, like you're probably not going to... you're not going to be heaps better off.
And it's also dependent on who is hedging, because how good are they at hedging? Like that's essentially... You're kind of, if it's a fund, if it's a managed fund you're investing, you know, I could try and hedge as a portfolio manager. But
I don't know if I trust you to hedge based on your...
You know, like it's more, they've got to be really good and have views of all the countries and the movements in their currencies and where interest rate changes impact currency a lot if they're like not expected. And so there's so much, it was way more economical in terms of taking a view on the currency than it is just taking a view on the company.
I'm just going to really wrap this up because I'm so bored of this. Sorry, I'm just like hedging, unhedging, not your fault. It's just a kind of a boring thing.
I feel like got there in the end. We could probably chop out
Sorry,
you're
not boring. My point is this whole thing, I'm just like, it feels to me complicated for no reason.
I think...
Unless you're a currency expert, maybe don't worry about the hedging.
No, like I think there's options you could buy hedged or unhedged is kind of what she's saying. So,
so maybe what we're getting here is this is not advice, but like unless you're an expert when it comes to understanding whether hedged or unhedged is going to make you better off or you feel confident in that, then if you weather the currency exchange, whether it's up or down, it's probably going to be similar to dollar cost averaging. If you invest regularly, you're going to be getting stuff that's cheaper and stuff that's more expensive, but you know, is that kind of a good...
Kind of. It's more like...
Me, I'm just trying to wrap it up and like make it simple. I'm like obviously not doing a very good job of it.
Yeah, let's just leave it at that. I'm kind of like, if you want more information on hedging, we can do a deep dive on that. There'll probably be about 2 listeners.
Yeah. Maybe we'll do a little vote on this episode. If you are interested in that, let us know. We'll just do a little yes or no. I'm assuming it's going to be a no, but like you never know. Oh my God, Vic. Before we wrap up, I do just need to do a little PSA, FYI, for anyone that is listening and who is interested in our property podcast.
Yes.
The episode coming out this week is with Holly. She's so great. She's actually a lawyer, but the story is not about law. It's about essentially what happened before she knew what she needed to do to protect herself when it comes to buying property with a partner. This is kind of the property story from hell, in all honesty, and it's so juicy. I loved that she was comfortable talking about it with us. It happened so long ago that I think she can look back and have hindsight, but she's also built her whole business around trying to help other people not ending up in this situation. So for anyone that is interested in property, definitely listen this Thursday when that episode comes out.
Ooh.
Let's play a really short snippet. We'll play just like a little trailer to give you a taster. You've had the most outrageous experience with... I shouldn't laugh because there's actually nothing funny about this story.
We can laugh now. We were literally maybe 1 month away from finishing. Windows were in, walls were painted, kitchen was in. I got a text that day at work from my partner being like, is your mum still coming for dinner? And I was like, yeah, why's that? And he's like, oh, I don't think she should. I was like, okay, that's really weird. I just had this gut feeling of nobody saw this coming. I didn't see it coming. I was away for the day with like some girlfriends, and I got home and one of our friends said, oh, Holly, I don't think you should go in there. Nobody who was meant for me would ever do that to me in my life. So then we faced a 3-year court battle over this house. It was one of the most horrific processes I think I've ever been through in my life. I've spent tens of thousands on lawyers filing this evidence, 4 years of my life, for a judge to sit there and look at me and go, I haven't read any of it. And it was time to move on with my life and realise that there is way more to life than money.
But have a great week, everyone.
Yeah.
Why are you laughing?
Because I thought you were going to say Vic, and I was going to be like, thanks. And then realised.
I mean, have a great week, Vic.
You too, Soph. Have a great week.
Thank you so much for listening to The Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode, because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday, but until then, Listen to Erasing the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of the Curve Weekly on Monday.
Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.